Welcome back, everybody. Delighted to have for a second time Gerald Celente. Was deeply popular the first time, and we're delighted to have him back. But just a word before I hand over the mic to him. Gerald runs the Trend Journals magazine, and I've been fortunate enough to get a complimentary copy, and I'm actually going with the screen share here just to show you the gentleman's commitment to his journaling and writing. As someone who is forced to write, I force myself to write. I'm lucky if I knock out 4 or 5 pages on my, that's with charts in terms of what I feel has been moving on the month. This is Gerald's effort, and it's an excellent, detailed, lengthy tome with an immense amount of value set in it. This is the Trends Journal. So before he gets a chance to say a word, we're going to showcase a little piece of his work. And he doesn't pull his punches. There's his strap line. The bullshit Biden's rougher red line is a red carpet for Netanyahu, who's on the right side of history, just as I expect him. But if you think it's just all about Israel, I want to just show you the content as well inside. The economic updates are vast. The detail here, this is just the content, the index of what will be covered. Trends on the global economic macro front. You're talking about a professional that's been in the game for 40 years, has been calling trends, largely been accurate on most of them, right the way through, from everything from the technocracy, crypto markets, all forms of aspects are being covered right the way through the geopolitics and the key movers. I understand that Gerald's got 2 key trends he's going to be highlighting, and I'm certainly not going to steal his thunder on that. But just look at the number of pages. I'm jumping right the way down. This is a 200-page tome. Now, for people there that actually have subscriptions to mainstream media, newspapers or magazines, and I include Time magazines, New Scientist, all of those. It's time to throw those out. If you want true value of what's going on, spoken in simple English, with clear insights, actionable opportunities to actually build wealth and prepare for retaining that wealth in what is a reset time, I would argue these are the kind of circulars you want to be supporting. And it comes down to no more than just a shade over $2 a copy. That is per a month. I stand corrected, but I'm pretty sure it's monthly. Gerald will correct me if I'm wrong there. And you will get that for a full year, and that's going to keep you ahead of the pack. And I suggest that this is a great way to support it. Take the surname Hunt, pop it in the link below, and get yourself on Gerald's circular going forward. Anyway, we will refer back in the parting shot and let Gerald in his own words take us through that. But welcome to the show, Gerald. Glad to have you.
Oh, thanks for having me on. Well, it's a weekly magazine, and again, we're not bragging, but there's no magazine in the world that comes close to it. You mentioned the geopolitics, the socioeconomic, from high-tech science to technocracy to health, fitness, nutrition, AI, whole section. And what we do differently, for example, the Israel war going on. We subscribe to various, like Haaretz, the Israeli newspapers. We go to IRNA, ISNA, the Tehran Times to get their views. We go to Al Jazeera to get their views. We cover the world, and then we give, this is what they're reporting. This is our trends analysis. This is our trend forecasts. So there's no propaganda in there. And the motto is think for yourself. You know, we don't tell you what to think. These are what we see. This is our trends analysis and forecasts. And if they hit that link, it's the grand total of about $2.50 a week, which
You
is
can't buy a
nothing.
coffee for that. Yeah, you can't buy, yeah,
Yeah,
absolutely incredible
because
value.
this is the Wall Street Journal. This is the Saturday's edition, $6. Look at the big picture over there. Well, excuse me, that's the wrong one. There's another one here. Here it is.
I'm sure you got one there with Pride Month picture. Don't
Yeah,
forget that one.
here, this one over here. Brain teasers test best young spellers. Sting like a bee. Orrin Lamb, 14, of Benson, North Carolina, reacts to a question during competition in the Scripps National Spelling Bee in Ox-on Hill, Maryland. What the hell do I care about this crap? I'm
They're
buying
just
this
throwing down the value, aren't they?
I'm buying this thing we need economic data.
Yeah.
That's all they're hardly reporting any of it. Journalism is dead. It's gone. The bigs own that scumbag. Every time he got caught with his pants down, Bill Clinton bombs away over Baghdad. 1996 Federal Communications Act did away with the restrictions of the bigs buying everything. And now
Yeah.
6 companies own 92% of all of the American media. And all the people that put this crap out, they're prostitutes. They're media whores that get paid to put out by their corporate pimps and their government whoremasters. We are in the most critical times of my lifetime. So we're doing everything we can to give the people the information they need to prepare, prevail, and prosper in these very, very dangerous times ahead. Dangerous in many different ways. So, we're doing
100%.
the best we can. And we
You
want
can
to
either
enlighten.
have the spelling bee, or you can find out exactly where you should be putting your money and what's really going on in the world, both in the US and internationally, and how to protect yourself. Yeah, it doesn't say anymore.
Yeah,
In fact,
yeah, there's
let's go.
another one. There's another
Yeah,
Wall Street Journal one. Yeah.
heat.
In
Yeah, it's a
Florida,
hot
in
day.
Florida's heat, a fountain of youth.
Yeah,
What am I, 6 years old? Did Taylor Swift get screwed last night? I mean, that's the news. Yeah,
yeah.
this is the New York Times. They call it the paper a record. $6 again. I call it the toilet paper record. Look at this stupid crap. They have these big pictures because they don't have journalists anymore. They're not giving you anything. So the people aren't prepared for what's happening, and they have no clue what in the world is going on because all they're doing is buying the sound bites that they hear from the prostitutes.
100%. A heading, in fact, a headline I saw, and I think you've got some comment loaded for us on this one, Gerald. The FIDIC, which is the deposit insurance scheme, commenting that there's over $500 billion, that's 500 plus billion of deeply underwater, largely, I think, real estate related loans in the US banking, affecting at least 69 odd banks. Tell us more. Take us into those weeds, please.
Okay, let's look at one of our top trends for 2024. Again, these came out in January. Banks go bust. No one's talking about this. Tracking trends is the understanding of where we are, how we got here to see where we're going. And again, I had best-selling books. There's trend tracking, far better than Megatrends, Time Magazine. There's International Best-Selling Trends 2000. Been at it for 44 years. Nobody's talking about this because one of our sayings is opportunity misses those who view the world through the eyes of their profession. They're not looking broadly. Let's go back to the COVID war. Began on January 2020 in China in celebration of their Chinese Lunar New Year, the year of the rat.
Yeah.
By the way, they call it a pandemic. The World Health Organization, or the World Health Organization, called it a pandemic on March 11th, 2020, when the grand total, you could Google it up, 4,219 people died out of 8 billion. More people fell down the stairs dying in over 2 months than COVID. But anyway, get back in your house. You can't go to work. You work from home. Yes, sir. Yes, sir. Now, people are staying home day after day, week after week, month after month. And now they're saying to themselves, I've been getting up at 5 o'clock in the morning to commute an hour and a half each way. What am I, out of my mind? I'm not going to do it anymore. Now, I'm the guy that has the tenants there, the workers, the employees. I got 10 floors in a building and they're all in cubicles and I don't see them anyway. I don't need all this space. Only come in a couple of days a week. Okay? Now I'm the guy that owns the building or the companies that own the building. People aren't renewing their leases. You mentioned about the commercial debt coming up. You ready for this? In the next 2.5 years, $4 trillion in the United States of commercial real estate debt is coming due. There's going to be massive failures and banks are going to go bust. Let's go back a little over a year ago. 3 banks failed in the United States: the Silicon Conman Valley Bank, Signature Bank, and First Republic. Boop,
Yeah.
gold prices shot up, the market shot down. That was 3 banks.
Yeah.
That was 3 banks. And how many did you say are in trouble right now?
Oh, mid-60s. Yeah.
You know what the numbers that I've seen?
And that's an
Almost,
undershoot.
yep, almost 300.
Yeah.
Here, look at the data. Don't believe me. Again, we only put the data in there. Go to Castle Systems with a K. Google in office occupancy rate, meaning how many people are going back to work. In the United States, in the largest cities, 50% occupancy rate. What is the vacancy rate? Meaning empty buildings. In New York here, 23% vacant. Portland, Oregon, 29% vacant. San Francisco. Yeah, you left your heart in San Francisco, you're going to lose your money in San Francisco. Over 36% of the buildings are vacant. Oh, but the streets are filled with homeless and migrants. It's beautiful over there. Hey, you need some drugs, man? You want to get shot up? Go over there. You get all you want. Now, there's going to be massive failures. No one is talking about the massive failures and how this is going to crash the banking system. It's going to be the worst collapse in modern history. This is going to make the crash of 29 look good. Again, the numbers are right there. No one will look at them. They will not report it because they're prostitutes. They're media whores that get paid to put out by their corporate pimps and government hellmasters. And number 2, they don't teach trend tracking. They don't teach it at Harvard. They don't teach it at Yale. They don't teach it at Cambridge, Oxford, Princeton, nowhere. You know why? They don't know how to do it. Let's wait until December. And this will be the news. What happened last year? Here are the big things what the hell do I care what happened last year? What's going to happen next year? We don't know. So what we're telling the people is you better prepare for this. And again, here, this is from the Trends Journal. This is part of our economic update. The magazine just went out yesterday. Barely reported in the U.S. media is the decline in the U.S. manufacturing, which was down in May for the 18th time over the last 19 months. And then we go on showing how bad it is. And then we go, banks go bust, cover up. Not a peep from the prostitutes about the coming bank implosion as the office building bust brings them down. Again, to illustrate the danger ahead, Hindenburg Research just published this report about Axos Bank. This is AXOS. Here's what they write. Contrary to many peers who backed away from deteriorating commercial real estate market post-COVID pandemic, Axos doubled down, increasing its total exposure from $5.5 billion to $9.9 billion in March of 2024. Now 53% of Axos' total loan book is exposed to these segments. The industry has begun to plummet. Distressed U.S. commercial properties rose to $57 billion in 2022 to $86 billion in 2023. $2.2 trillion in commercial mortgages are set to mature. Again, it keeps going on. No one is talking about this. Who the hell heard of Hindenburg Research? Nobody.
I like the name.
You know what I'm saying? Except the people that really know about this stuff. And again, Bloomberg wrote that Axos Financial Inc., the latest target, slumped Tuesday, and they go, Bank OZK was hit in May, blah, 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 blah. And they say, they also note that, quote, a wall of maturing property debt this year is estimated at nearly $500 billion, as you were saying.
Yeah.
They're going to fail. Now let's
Yeah.
go back to the office occupancy rate, what it was before the COVID war in San Francisco, a vacancy rate rather.
Yeah.
It's 36% now. The vacancy rate before they launched the COVID war, and the geeks were the first to do it, was 3.6% vacant in San Francisco. Now it's over 36% vacant.
Wow. Yeah. You 10x that number. And that would have just been a frictional vacancy. You know, there's a churn, it takes a bit of time, get it advertised. There's a sort of structural vacancy that as people are coming out, you don't immediately replace people. So it literally was 100% bar the dormancies between cycle. And now you actually have entire dearths of system that are unmet. And of course, these properties got bought for ever higher rates. I'll give you the European because I know you're very US-centric, but it helps to support your case as well with a internationalized example. I don't know if you remember, but the Canary Wharf building, the HSBC Canary Wharf building, which is obviously a landmark building, sits just off the Thames on the south side. There was a long story of the development of the Canary Wharf. The original guy went bust, and then he came back and phoenixed and finished it. The tube lines weren't there in time. Government projects basically broke him, running late. But anyway, long story short, they actually sold that building in 2007, peak property mania, for under 1%. I think it was a 0.8% yield on its that particular landmark building. Can you imagine that now with current interest rates and current occupancy rates and the current even the demographics, more retirees, less working age people, everybody more tech literate and remote home working, the travel, the fact that it's become Sin City, you got to hurdle run the hobos and dodge the pushers, etc. It's absolutely BLM riots here and there, largely peaceful with burning car dealerships. It's just not the ideal run for the office, is it? And so with these macro social unrest type trends, the fentanyl crisis, the drug pushing, of course, police not allowed to do anything, many of them retiring out of particularly those urban areas like New York and San Francisco, where they'll be thrown under the bus if they end up rough handling a criminal in any way in being resisting. There's no turning this bus. It is only going to escalate into its own capitulation. Surely the maths plays out and these buildings become near worthless and we end up with inner city urban slums that end up, I don't know what you repurpose them for, because I also want to make the point that others have made to me, you can't repurpose it efficiently for retail living. You've got your elevator shaft, you've got corporate floor plans. You don't just position this and smash out high-end apartments, do you?
You're 100% right. Buildings built within the last 50 years are non-convertible. They're just big, empty, open spaces. That's according to the data. And yes, we do cover the global markets. We wrote about HSBC leaving Canary Wharf, and we're also writing, for example, what's going on in Germany. With the office occupancy rate there, it's equal to the United States. So people aren't going back to work. There's going to be a bust that's unbelievable. And again, they're not convertible. And they're going to, and you mentioned before about interest rates. These are interest rate loans. The interest rates were half of what they were, compared to what they are now.
Yeah.
So now your interest rates have gone up as your tenant base has gone way down. So this is going to be a crisis again. We're very bullish on gold. Gold could hit $3,000 an ounce this year.
Yeah.
And here's the reality. The people on the street, on Main Street, they're suffering. Again, the data. In America, 63% of the people are living paycheck to paycheck.
Yeah.
So they know how bad it is. The inflation's killing people. So they realize how bad it is and they feel the pain when the markets go down. When the markets crash, that's when the street wakes up to the reality. And now you're looking again, you look at the data, the consumer spending. Yeah, this is from this week's Trends Journal. First, they told us that first quarter GDP in the United States was 1.6%. Now they lowered it to 1.3%. As for the plantation workers of Slavelandia, that's what we call the workers because it's just the robber barons have taken over the whole world. The Commerce Department has reported that consumer spending, by the way, consumer spending accounts for 70% of America's GDP. Manufacturing only contributes to 11% because these lousy scumbags gave away with NAFTA, bringing China into the World Trade Organization. All the manufacturers went to cheap labor markets. So it's only 11%. Consumer spending was up 2.5% in the first quarter. They just revised it. Just 2%. That's it.
And most of that's going on credit card debt, where you have well over $1 trillion at 21% average interest rate.
Yep. And when you look at what's going up, their car insurance, their rent, automobile costs. Do you know what if you do the data, putting inflation into the numbers, if you put inflation into an automobile in 1973, it would have cost in today's dollars $22,000. Today, $50,000. And home prices since the COVID war have gone up some 40%. Now, they don't put that number into the consumer price index. They rig it.
Yeah.
They say, oh, people are renting. We have to put the price of, let's say, steak went up. Well, people stopped eating steak. They're eating chicken. So we don't put that number in there. We show the difference. The inflation numbers are more than double of what the government is putting out. It's a total lie because it's a crime syndicate that people call the government. They're murderers and thieves.
Yeah.
Again, the data.
And shrinkflation as well. That's the other tool. Coffee's gone up a lot. Oh, okay. It's no longer 250 mils. It's a 195. But, it's the same number.
And then to show you, one of our covers, again, plantation workers of Slavelandia, where the robber barons are running the show. This just came out. The executives, the CEOs of the S&P 500 companies, their pay spiked 13%. For the plantation workers, 4%.
2, 3, yeah.
And again, when you put inflation into it, it's down. The rich are getting richer, and everybody else is getting poorer. And again, when we're talking about this, the banks going bust, this is also going to hurt all these pension plans and what the governments are invested in because they got a load of dough in these commercial real estate sectors. And they're not going to, this thing is going to be, it's crucial. It's crucial.
I'm so glad, I want to jump in here because I'm so glad you brought in pension funds, because if that's not the other Led Zeppelin that's going to go up in a ball of flames, the exposure to commercial property, the exposure to US government debt, which, by the way, the 30-year since the peak valuation in 2020 has fallen 45%. That's what people don't realize. If the US runs out front with interest rate rises and keeps the dollar relatively firm, they are actually sitting at the other side of the seesaw is the debt. And that's the biggest collapse. And we'll be chatting with Tavi Costa, but he's got a great chart out on the beginning of this year, the divestment of China from treasuries and the investment into gold, which again ties in with your core thesis. And you're now talking about an asset class that's dominant in pensions because it's supposed to be the risk-free, low volatility asset class that no longer deserves the risk-free moniker. It actually deserves a risk premium on the basis that it's absolutely guaranteed to go bust. It's just a question of how soon in what a 40-year escalator, how hard does that elevator come down? Is it a 4-6-year elevator, or is it a 4-10-year, elevator? Either way, we're going to have to hit the debt immensely down just to maintain the dollar relative dominance. It's not dominating everybody, but it's firm. And pensions are the most exposed. And you've got that demographic pig in the python that is already at peak pension age. Now, the normal curve of the boomers are all in pension. Even the latest boomers are now pensioning out just at this point. So they're not going to the office anymore, and their kids are working remotely. So there's that commercial property, pensions. It's such a doom loop when you combine commercial property, pensions, and the treasury markets, which are overly invested in that. I'd love to hear whether we're hitting the target with those comments, or if you've got anything to add.
Well, the only thing, again, let's look what just happened. Up in Canada, they just lowered the interest rates, and the European Central Bank's meeting on Thursday, and it looks like they're going to lower interest rates. So the United States interest rates are high. So what's that going to do to these countries? Inflation is going to escalate because the value of their currencies is going to go down.
Yeah.
So here's our forecast. There was this great guy called George Carlin, great comedian.
Yes, I know him well.
Matter of fact, I knew his brother well, Patrick, may he rest in peace. He worked for me for a while. And George Carlin used to say, it's one big club and you ain't in it.
Yeah.
The bankster bandits are one big club.
Yeah.
I believe the United States is going to lower interest rates in the run up to the presidential reality show in November. They're going to do it to juice up the economy. There was a line that they used to use back in 1992 when Bill Clinton was running behind the scenes, quote, "It's the economy, stupid."
Yeah.
And that's all the people care about. So you see what they're doing now. Look at gas prices. They've gone way down. Look at Brent crude. Brent crude's like at about a 5-month low. This is even after OPEC Plus said they're going to lower demand, lowest
and cut supply.
rather. Yeah. And so now you're looking at diesel use. It's like at a 26-year low in the United States. It's showing you how much there's less truck traffic and how things are going down. So they're
less truck traffic, less buying on Amazon with delivery orders and packaging for the oils involved even in that. So I've made this point. It's ironic. Data comes in trends just like you've described. And actually we had the original recession that was not a recession because the economy market was too strong. The recession used to be 2 negative quarters. And they said, no. And they kept pushing out a string of positive data to show we're still strong, employment's still great. And then in the last 2 non-farm payrolls, you have trends. And roughly 2 months ago, I said, I think we're flexing here because we had a very strong dollar period. And we came in unders on the number. We came in unders on the average earnings, and we overshot on the unemployment. And then that second non-farm payrolls that passed just 1 month ago, and we're going to have another one this Friday, of course, another undershoot. So you're getting a trend of now real weakness, and all the headlines are now GDP coming down, businesses now less focused on pricing power relative to rivals and more focused on cost cutting. And all of these are the typical aspects of we're actually in a deep recession. We hit the recession criteria originally. They were doing a little bit of stimulus, actually. We're not getting real tightening. So they masked it for a while, but now the real hard, and we're going to see again on Friday whether we're going to meet expectations or going to undershoot. And I think that's going to rug pull the dollar a little bit for a while. And you could even then get them, because of Canada, Europe, looking at cuts, as you've already mentioned. We went from 7 cuts this year, by the way, to maybe 1 in December recently. So maybe it's going to wash a little bit back towards the cuts. What's your expectation for rate cuts generally for this year, if you have?
Again, I think they're all going to start lowering rates to boost up the economies. And you mentioned about
China. Delayed though until November, heading November for the election bits. Are they going to make everyone?
I think they may even do it earlier. They may do it in July in the United States. And they got to again. You're looking at the numbers coming out. Again, the mortgage demand was down another 5.2%. You know, you get your average mortgage now is a little bit over 7%.
My
When the
big
COVID,
question though is if they do start any form of cutting, and I've always said much less, much shorter, and then interest rate spikes is the end game. Who's going to buy the debt, and is the market going to accept the increase in valuation that is implied? And just to visualize this for our viewers, because I know you know this very well, but I'm going to just bring in that 30-year chart. So I'll go with the share screen and give you a chance to see that, Gerald. And this is what the 30-year has done. Is it going to get a technical rally for a short bit? Again, forgive me while I find it. And there it is. Can you see that, Gerald? Okay.
yep, yep.
That's our 30-year Treasury, US Treasury total return since 1919. By the way, I'll just make a couple of points while we're here. That's 81 when we had peak gold. They tamed gold, and then this is the financialization of everything parabola. And then this, of course, was our top call in 2020 for debt. And this is a 45% loss from the high. Are we going to get a technical rally? But will the market really buy up the treasuries with China divesting before going lower? That's my take. Could it maybe get a small rally? But how much can we really cut with a chart like that?
There's that old saying, sell in May and go away. And going back to the dollar, they're going to lower they have to lower go back to the Great Depression. The UK was going down, and they asked the United States not to raise interest rates because the pound was taking a beating. And they agreed not to raise them. I think they're going to do the same thing now. I think everybody's going to start lowering interest rates, and it's going to be the beginning of the death of the dollar. That's what I want to make clear. Because the only reason the dollar is strong is because interest rates are so strong. Let's go back to the debt level. With interest rates at the level, and you were pointing this out before, at the level they're at now, it costs you more to service the debt.
Yeah.
And the debt is at $35 trillion. It's increasing by $1 trillion every 100 days.
Yeah.
So does the United States want to have high interest rates when they have to pay all this dough on their debt? No. The dollar is only strong because, again, of high interest rates.
Yeah.
And I believe they're going to lower interest rates because every country, Chile is announced they're in a recession now. It's one after another. Germany is always it's been on the verge of recession, in and out since 2019. And this is the third largest economy in the world. Look what's going on in Japan. The fourth largest economy. They used to be the third. They're going to lower interest rates. That's our take. And the lower interest rates go, the higher gold prices go. It's as simple as that.
But I would even argue you don't need the low interest rates now. We've reached such a loss of confidence in debt because of that risk premium aspect that the failure of debt is the turbo juice of gold. So even with escalating rates, gold can and probably will go up. I'm just not sure who's going to buy all the debt, because the minute we cut a rate, we're saying the market's going to accept a higher valuation for treasuries again. And we're on the seesaw. There's the currency and the debt. They both have to go down. But if we're softening the dollar, we're actually requiring a bid on the debt. If it doesn't come, the market goes very, very liquid and holds its value because nobody is panic selling. Can I point out, and you'll remember this as well, I'm sure, that the second biggest holder of cheese, it's the California Teachers Association, wanted to sell their debt holdings to meet pension payments. And there was insufficient liquidity in the market for it, and none of them are allowed to spook the market and run the ladder down, and set a new mark to market on the debt levels. So they quietly say, hey guys, we're trying to sell some treasuries, and kind of like nobody's buying, and we don't really want to run the stack down. So suddenly a bank appears that says you can lend from us against your collateral until the adverse conditions, they're describing the current debt valuation, the adverse conditions go away, and it bounces back up and you can sell at a higher level. We'll provide you some liquidity. Don't be selling your debt, right? Don't crash this fragile market. And people don't realize there isn't a bid. This isn't a real natural price discovery mechanism on the debt. Actually, nobody internationally wants to be a net buyer of US treasuries anymore with the highest yield after the biggest fall.
Yeah.
And that's going to be a problem for cuts. And that's my big message. They need the cuts. Retail needs the cuts. Consumer and retail and all the equities associated with that are going to take a bath for sure. But how far can you really go? Because otherwise, you're starting to allow contagion to go on, and there's no money who wants to buy it. So will the Fed potentially monetize up the debt value to allow for that dollar easing? I don't know.
Yeah, they will. Again, what you're informing the people about is excellent. And I want to really thank you for the knowledge that you have and the information that you're giving the people, because people don't talk about what you're talking about and
Yeah.
the facts of the data. So it's very important. You mentioned before, that I've had a lot of, very accurate forecasts. Of course, here's the Trends Journal when it was a monthly magazine, .com this, fall 1999, was a quarterly. We forecast we said the .com bust would happen by the second quarter 2000. It did. Called the 1987 stock market crash, the .com bust, the Asian currency crisis, took out the domain name, the panic of '08 in November 2007. Again, before I go further, remember that saying, sell in May and go away. When did the markets crash in 1929? In October. When did the panic of '08 hit? September.
Yeah, also. Yeah, September, October is a
Yeah.
tricky period. I mean, 1987 crash, September. I mean, I was an August intake into the army, and a month later, I was 40% down.
So it's a very important time.
Yeah.
Now, going back to what we're talking about with the economy and where it's going, to us, the markets are way overvalued, and it's a game. Here, this is from CNBC, headline June 4th. How Roaring Kitty's wealth went from 53,000 to nearly 300 million and could one day top 1 billion. Almost 5 years ago, GameStop champion. GameStop has nothing to do with the global economy. The markets, again, what we're saying is that this may be a time to sell. And I want to make this clear too. There are no advertisers in the Trends Journal. There's no advertisement. So when we say we're positive on gold, it's not like, there's a gold company behind us. It's nothing, there's no ads in there. So people don't tell us what to say. And so I just want to make this clear that we see this may be the time for a market bust to happen.
Yeah. And you think somewhere between May and October, September. And when you say markets, are you referring equities, or are you referring dollar and equities, or are you debt maybe, or any specific markets apart from equity markets? I'm assuming the equity markets.
The equity markets are going to crash when the banks go bust. It's as simple as that. So going back to my getting it wrong, and that's what I was going to make the point at. Yeah, you get it wrong. I'm a human being. Because one of my sayings is, people used to call me, I predict the future. Nobody can predict the future. There are too many wild cards. And one of the wild cards is I forecast that the markets were going to crash in 2012. I was totally wrong. They didn't teach me about quantitative easing in Economics 101 or graduate school. They made up this crap.
Yeah.
So you can't predict this.
Hmm.
And again, the wild cards, whether they're human or by nature. And I want to tell you the most important wild cards now are the Israel war and the Ukraine war.
Yeah.
The Ukraine war, you go back to our Trends Journal, the cover, February 22nd, 2022, 2 days before the Ukraine war began. From Cold War to Ukraine war to World War. World War III has already begun.
Yeah, many saying that.
We said this again going back to 2022. And just again, the Banksco bust, we call the office building bust in May of 2020 when no one was talking about it.
Yeah.
So going back to World War III, the United States and its allies, NATO, has more weapons to fire deep inside Russia.
Yeah.
This is not a proxy war. They're at war. If I said to you, listen, give me a gun, I want to go blow the guy's brains out next door, and you gave me the gun, you are an accessory to the crime.
Yeah, of course.
There is almost, the United States has spent almost $175 billion in weapons for the Ukraine war.
It's a money launder, as we both know. So they'll be taking the bungs with the military industrial complex. Zelensky will be giving them shares in his Cyprus casino that he's buying for 200 million. All that dirty deeds and the trafficking and everything else via Tel Aviv, all that mischief. But within that, like you say, there's actually feet on the ground. France has already sent special advisors, and that just means special forces, actually. Britain is there or thereabouts. I would imagine there's British equivalents there to show them how to use the armaments while you're fighting then. Yeah,
Yep.
you know, it's not like, oh well, I'm just here to read you the manual. I'm not really involved. There's no positioning like that. This is how we fire this thing, and the advisors, and this is how you maintain it. Because some of it's quite complex equipment and it's Western made. So you are actually 100% correct. And I actually there's a MP, and you've got very broad tentacles. I'm impressed that you're very familiar with outside the US markets. But you might not have heard the story, maybe you have. There's an MP that was actually saying Sunak wants to stand down. He doesn't want to be a wartime prime minister. So in actual fact, it's expected that Labour will come in next. So there's a chap called Starmer who's equally repugnant and very World Economic Forum.
Yep.
And was actually a prosecutor when all the young girls up north were being and drugged up and did nothing about it. So, all the fingerprints of a ne'er-do-well and what your typical scumbag would, annotation would suit quite fine. But anyway, he's expected to potentially come in on a Labour groundswell. And this guy actually wants to stand down. He doesn't even want to carry on, this Rishi Sunak. He's the one who benefited with the pharmaceutical companies, of course, and had pre-ordered everything that was needed for this unforeseen bat-induced sickness that we were told about. That seems to not be the narrative anymore. So that it's quite clear that this MP was saying he wants to stand down, and that and his statement is we are already at war with Russia.
That's
and
right.
They've been putting out these test balloons on military conscription already. And I expect that this election pivot, the new guy Starmer has already said one of the things he'll do is bring in the conscription. So they're ready to harvest new souls, meat grinder, put in the white Anglo-Saxons to kill the white Slavs in another population rout of meaningless, where there's no defining a victory in this. It's just a mess, and there's no winner. in any situation. There's just body count and destruction. And then BlackRock gets the contract, no doubt, for rebuilding whatever aspects get destroyed. So I'm with you, and I hear you on that view. But Main Street, the people that are watching this, don't feel it as a war yet because their media isn't screaming it. But very soon they will. And they'll go, whoops, there's this escalation. Will it take a bank hack that was Russia did it and zeroed all your accounts, or China did it, or North Korea, who knows? Or are they going to do something hot that's going to involve a shoot down of a plane or something? It's more a case of detail. We're arguing or wondering and speculating about the detail that actually makes it for everybody else the hot war it already is. Is that an accurate summation?
Well, on the bank, I've been saying the same thing. All of a sudden, you're going to hear the Russians hacked into our banking system and you lost all your money. But don't worry about it. We have a digital coin now.
Yes, a UBI.
Yeah. Yes, a CBDC.
Token.
So we know every penny is spent, what you spent it on, so we can get our money and tax money because we don't work a day in our life. Yeah. It may be that. It may be, again, it may be a false flag event. The people will back like that. They follow their leaders. Look at how the people marched off to the COVID war. And if you didn't believe it, you believed in misinformation. Go back in the United States. Again, going back to the war, when I'm saying going back to the economy, when all else fails, they take you to war.
100%.
What followed the Great Depression? World War II. Google up. Franklin Roosevelt seizes Japanese assets. Just Google it up.
Yeah, it's there. It's a fact.
You know what you get? History Today, mainstream media. Franklin Roosevelt seized all Japanese assets in July of 1941. Japanese bombed Pearl Harbor in December, right?
Yeah.
He seized all Japanese assets. That's right. And the British and the Dutch and the United States put sanctions on Japan that cut off 3/4 of their global trade.
Yeah.
And 88% of their imported oil.
I was about to say, their reliance on energy was that forced them. I mean, what else can they do?
Right. But you know why they did it? Again, History Today. Those dirty Japanese. They invaded French Indochina. French Indochina? What the hell are the French doing in Cambodia, Laos, and Vietnam? Oh, we're stealing their rubber, their tin, pillage, and murder. Yeah. How dare the Japanese try to stop? What? And I'm gonna. And you know what else? Those dirty.
Getting in the way of the opium sales to China and India. Yeah. Don't get in the way of our drug patch. Yeah.
Yeah. Oh, and those dirty Japanese are only 800 miles from the United States forces in the Philippines. What the hell are we doing in the Philippines?
Yeah.
All right, but people have I didn't even know about this until last year. I knew about the oil, but I didn't know about seizing all of the Japanese assets and cutting off their trade. Yeah. So what I'm saying is, when all else fails, they take you to war. Let's go back to the Israel war. That murderous little bastard, Netanyahu.
Which isn't his real name, by the way. Not one Israeli prime minister has ever served under his real name, and they're all Eastern European names, but carry on.
That's right. As I say, don't call me an anti-Semite. None of them are Semites. They're all Ashkenazis from Khazar region, 100%. Northeast of Turkey. So they're not Semites. People, again, they have no clue. Again, we wrote about it week after week after week after week. And we write about that clown guy, by the way, that's going to be the labor guy. That's so pro-Israel. Yeah.
Keir Starmer. Yeah. Absolute Zionist to the core.
Yep. So anyway, 39 weeks of protests were going on in Israel. 39 weeks of protests because of Netanyahu's Judicial Reform Act that said there's no court anymore. The politicians will take over because I don't want them to take me to court because they're going to bring me up on charges. 39 weeks of protests. Hamas attacks on October
False
11th,
flag.
that they all, again, we only put the facts in the Trends Journal. 2 days after that attack, the information came out that the United States and Egypt had warned them that this was going to happen. Number two, the guy that was the intelligence head, oh, he quit, didn't he? In Israel. They knew this was going to happen.
Yep.
They let it happen, just like we're going back to what happened with Pearl Harbor. And they knew that was going to happen too.
Yeah.
So when
I mean,
all else
I've
fails,
seen 5 or 6.
they take
Sorry,
it away.
on that one point, 5 or 6 separate accounts from Israelis that actually worked the security, telling that they were stood down, that you couldn't even have a sparrow or a big bird fly through a laser, and all forms of triggering. The notion that you could have driven a convoy of Toyotas, brand new Toyotas with, multi-machine guns that somehow have been financed and funded somewhere cute, right through there, is an absolute fallacy. And in fact, the majority of the deaths were the choppers of the Israeli IDF
Right.
firing on their own citizens as well. So, this whole story is, we need to escalate this ethnic cleanse. We want to finish the job, quickly slap ourselves in the face so we can justify beating the pulp into these guys. And it's a scandal. It's an absolute scandal.
Again, what you just said about the IDF helicopters, you could go to Haaretz, the Israeli newspaper. They reported that.
Yeah,
they also showed the Israeli tanks blowing up the kibbutz. The pictures are right there. Yep. Again, so what I'm saying is, going back to the economy and in trend forecasting, all things are connected. And you have to look at the whole big picture there. When the economies fail, when the maniacs in charge are going to lose power, they go to war. You go back to the dot-com bust. Again, you could look at the data. 90% of the American people supported the Afghan war, from little Georgie Bush, a guy with a pair of cojones smaller than a mothball and a brain smaller than a pea. We're going to get that guy Osama bin Laden, dead or alive. The dot-com bust had just happened. The America was going into a deep recession. Totally forgotten. Totally forgotten. Yeah. Oh, and then they artificially propped up the economy with the fake real estate boom. Hey, you don't have a job, you got no money, you're deep in debt, don't worry about it. Sign over here. We call it a subprime mortgage. Oh, and the banks, the bandits that did it when the crash happened in 2007 and 2008, $29 trillion the Federal Reserve dumped into the banking system to bail them out. Yeah. 29 trillion. Oh, that's not my data. That's from Bard College, Levy University, Levy Institute at Bard College. That's their numbers.
Yeah. Yeah, and the rating agencies that marked everything AAA and waved it all through. Some might like to think it's incompetence. I think it was well-engineered, well-worked mafia ring of Zionists. Gerald, with this in light, and taking what we both know is their modus of operandi, should we not be looking for the equivalent of the financial collapse false flag event, which is why I brought up, Russia stole all your money, or China did a hack, and now, the energy got taken down and all the servers got scorched at Amazon and Google and Microsoft or whatever. They've got the cooperation of their oligarchical friends that brought the vaccine and everything else that they brought, and do the servers for the military industrial complex. This is what we should be expecting. And in other words, the most important thing is, how much physical gold do you hold? Because this isn't a thing for 5%. I get frustrated by the 5% brigade. In normal times, I would say, go on 5%. In end of time times, why would you want to lose 95%? In everything else, and surely people, and diversification, portfolio theory. I'm not going to be the guy that debunks all of that, but physical things as well, like unencumbered property by debt, farmland that can produce silver, and even the softs. We were looking at coffee. In fact, it's not so much a commodity boom, it's this major debt fiat contraction, that everything else is still the same old grain of rice, barley, kernel, ounce of gold that it's always been. But it's being re-rated up because of the collapse. We're in the parabola, paying off a mortgage. You get that chart, it goes like that, and then it suddenly goes a lot quicker, and then it hits zero really fast. That is the loss of dollar buying power, almost in the same way as the capital going towards paying off a mortgage. It's slowly at first that it's hardly happening. You start a turn, and then it's a capitulation. And it's that old quote of our famous book writer, what was his name? Was how did you go bankrupt? Slowly at first, and then suddenly, all of a sudden, very fast. And that's we're already in the rounding out bit, and we're literally waiting for the capitulation. And people are still talking 5% holdings for gold and things like this. Where should they be? What's your take?
Again, I don't give financial advice, only speaking for myself. I began buying gold in, I think it was 1978, I think it was $78 an ounce. And I've been buying it since. And most of my investment is in gold and silver. And I see silver prices going up as well. And silver prices going up for other reasons. Another reason is it's being used a lot in clean energy, and it's used in high tech. So your cell phones, everything, they got all silver in them. But unlike gold, when your phone blows out of your computer, you dump it. So you don't have a stockpile.
Yeah.
And so now you're seeing silver prices over $30 an ounce. And by the way, I bought silver back in, one time, I think it was in 2011, around there or something, around $40 an ounce.
Yeah.
So I see silver going up and gold going up. And to me, gold is the number one safe asset. Also, we've been very bullish on Bitcoin. And here's the deal. Again, putting it all together, what's your inflation rate in Argentina? Almost 300%.
Yeah.
So the average person sees the devalue of their currency. So they're not going to buy gold. They buy a tiny bit of this crypto or that crypto. If there wasn't Bitcoin here, gold prices would probably be about $4,000 or $5,000 an ounce.
Yeah.
So I see Bitcoin still being very strong. And the only way I see it ending is when the central banks go digital currency, because they're not going to want any competition.
Exactly. Then it's a rival. With better features as well.
Yeah. But that's not going to happen for a while. So that's the way we see it. So I'm very bullish on gold. And again, to me, it's the number one safe haven. And you go back to China. Why are the Chinese people buying this stuff up? Because they know how bad it is over there. Again, one of our sayings, one of our forecasts was the 20th century was the American century. But the 21st century will be the Chinese century. Because the business of China is business, and the business of America is war.
Yeah.
That changed. That changed when China launched the COVID war on the Chinese Lunar New Year, the year of the rat in 2020, and had 3 years of zero COVID policy. They destroyed the lives and livelihoods of hundreds of millions of people. Now let's go back again. Look at the big picture. When they came into the World Trade Organization, officially 2 weeks after 9/11, you look at China's GDP before they came into the WTO. They come in and whoosh, shoots up. As with all booms, there's a bust. They overbuilt the place, way overbuilt it. And everybody got into the real estate fever.
Yeah.
It was going to go down anyway. But now, by 3 years of zero COVID policy, they made a very bad situation much worse.
Yeah. True.
But
they have let the markets go down, though, haven't they? They've allowed their market to crash. which,
There's only so much they can do. And
yeah,
that's why the people are buying gold, because
yeah,
they know how bad it is.
yeah.
Your sales of retail sales of Chinese people buying gold, the numbers that I've seen are almost 25% increase this year.
Yeah, it's huge. And the other interesting point that came at a bigger level was India quietly received 100 tons from London. So
Yeah.
the old adage of possession is 9/10 of the law. It seems everybody's getting far more focused on self-sovereign holding of their core values. We remember the German saga because they went public, they got punished and made to wait up to 7 years when it could have been done in a matter of a month. And you're seeing that go on. And then the other news headlight, which I wouldn't mind getting your comment, was Dalio, Ray Dalio coming out and saying, concerned for the softness in the bond market and the lack of demand under debt, which brings us back to probably where I started and said, how do you bid this thing up that you can cut rates? Because nobody's wanting it.
Yep. Again, but they're going to have to. And they're going to have to because the economy's going down. And they're going to cut
Everybody,
them. I'll bet on it. I am betting on it. I'm betting on the markets. That's why I'm betting on gold, because they're gonna have to cut them. And by the way, what we see, they're saying stagflation is going to happen, where the economy's stagnant and inflation goes up. We call
yes,
it dragflation. You're going to
yeah.
see the economies go down and inflation go up.
And that brings the third trend that I would like to suggest to you, which I'm probably sure you already have. And that is, as governments' horrific finances turn ever worse, they pivot to the tax extracting approach, which is further destructive, a la Trudeau, who's gone 66%. That means government takes two of every $3 above 250,000 Canadian in capital gains. We're going to see further of this. And I was actually looking at a Hong Kong post, or it involved Thailand, which is quite far afield, but how they are looking at global revenue because they have a lot of foreigners living there, and changing the tax laws. Wherever you earn it, they want a slice of this. And we're starting to see a rush for extractionary powers to take money from the poorest part of the market that they all spent taxing in inflation, which has dragged us up into higher marginal tax rates, which haven't changed, dragged us into the capital gains tax rates that haven't changed, all on a reduced dollar. So, that dollar buys half what it is. You're not rich if you're earning $100,000 anymore in the US. You're barely middle class, and you've been dragged into what were rich man tax rates. $250,000, you're sort of doing okay, but you're not nearly as well off as it used to imply. So big trend, government really hollowing out the citizen for everything they've got, in spite of the fact that they are the orchestrators of the inflation and have already done immense financial damage to the citizen. Do you concur with that?
Absolutely. And let's go back and put it together. Before, we talked about the office building bust and the banks go bust. Look at all the tax revenues that they're losing with all these office buildings going down and less people commuting into the cities. Now, it's not only the office building owners that are going down. How about all the businesses that depended upon commuters?
Yeah, the hot dog stands and the cafes and the
Dunkin'
restaurants. Yeah,
Donuts, yeah, and there's no Friday used to be, happy hour time. Friday
the
now is the
pub.
least amount of time people are going to work. So the
Yeah,
whole vibe has changed. So going back to the taxes, you're 100% correct, because they're going to keep losing money with all of this. This thing is they're losing dough, they're losing revenue, and by the way, in politics, I was on the other side. I was I used after graduate school, I was working on major political campaigns in Westchester County, which is the richest county in America, and they sent me to Albany. They were grooming me. I was the assistant to the secretary of the New York State Senate. This is the guy that ran the whole show. I quit after 1 year. Watching grown men grovel to suck their way up to the top wasn't my trip.
Hmm.
But I then became the chief government affairs specialist for the chemical industry. And by the way, I also designed and instructed a course called American Politics and Campaign Technology, how to run political campaigns, and I taught it at St. John's University. So I was at the when I said anyway. So I was killing environmental legislation in the 1970s at the height of the environmental movement. At 28 years old, I was staying at the Willard Hotel, putting my meetings on at the Hay Adams. The Hay Adams, the White House is right across the street.
Hmm.
All I wanted to do was make money and move up. I didn't start growing up until around when the Iran war began. That's changed my life, and I wrote about that in my book, Trend Tracking. When Jimmy Carter came back from Iran after spending New Year's Eve with the Shah and his wife, saying that the Shah was the island of stability in the Middle East. In the Bronx, we used to have a saying, bullshit has its own sound. I became a political atheist at that moment. And that's when I started investing in gold and oil. As everybody's learning to hate Iran, not knowing, of course, the overthrow of Mossadegh in 1953 by the CIA and the MI6, because that
Yes.
son of a bitch had the nerve to say, this oil does not belong to Anglo-Iranian oil, better known today as BP, or Standard Oil, better known today as ExxonMobil. It's the oil of the Iranian people. No,
Yeah.
it's not. And they overthrew the government. So anyway, going back, that's how I got into I was on the other side. I have a photograph of me picking up Ronald Reagan 2 days before he's announcing he was running against Gerald Ford at the Chicago Hilton, and put on a brunch for him and 16 of our board of directors. I've been on the other side. I've been with presidents, I was with that little clown Major. I met him when I was a keynote speaker for USA Today when it was a big newspaper. He was a nothing little boy. I've been with presidents, prime ministers, and princes. I've been on the other side. It's a freak show. Look at the little, you're talking about Sunak. What a little boy of nothing. A little boy. Oh, how about the best cartoonist in the world could not come out with a better clown than Boris Johnson? Look at
No.
that little Catson Macron with a pecker maybe about the size of this, and his fake hair and a bad attitude. Out of his mind, Biden. One clown after another. And these are the people telling you what to do. Roll out the red carpet. Don't forget to salute. Here's your salute. All right, I've been there.
100% agree, Gerald. 100% agree. I think we must call time. I've thoroughly enjoyed this. Please direct everybody, just so that they don't forget, how do they find your site? How do they use that Hunt affiliate? Apart from the link below, if they want to go and find you on the website, where's the best way to do the business, to join in and really get the news before the news?
It's history before it happens. Trendsjournal.com. Trendsjournal.com. Simple as that. And again, it'll cost them a grand total of $2.50 a week, or subscribe to the Turlet Paper Record for $6 on the weekend, $4 during the week. The Wall Street Journal for $5 a day, $6 on the weekend.
Yeah, for a weather report.
So again, I'm so sad what's happened. We've never worked harder in our lives, by the way, to give the people the best they can so they could. I'm very concerned about it. And by the way, I also launched a movement called Occupy Peace over a decade ago.
I saw that, and I'm glad you brought it up. Do you want to tell people more about that? It sounds
well,
thing that...
they had a huge peace rally in Hungary last week. Over about 200 people, 200,000 people or something took to the streets. Where is the peace rallies? If the billionaires gave $1 billion for peace, we'd have peace. We need peace on earth. Peace has become a dirty word. And we got maniacs. These are evil people. They're murderers and thieves that are running this show. And if we don't stop it, it's going to be hell on earth. I'm very concerned about World War III escalating, and it's going to be nuclear annihilation. Again, John F. Kennedy, June 1963. Look it up. Speech to graduating students at American University. He warns that if we go to war against the Soviet Union, which he said no country suffered more than the Russians did during World War II. Over 20 million of them were killed, and they were the first to
Correct.
beat, by the way,
Too
Operation
often
Barbarossa.
forgotten by the West.
Yeah, yeah. And he said, if we go to war with them, he said, these are fine people, technologically, spiritually, culturally. We should not fight them. If we do, life on Earth will be destroyed, his words, within 24 hours. That was 63.
Hmm.
Look at the weapons now. Oh, and by the way, his end of his speech, he said, America will never go to war again. That was June, July, August, September, October, November. Jack, you're dead. They killed him.
Yeah.
By the way,
Yeah.
I have a photograph of me and John Connolly. John Connolly is the governor of Texas that took the bullet in the
That was
back.
in the car. Yeah. Yeah.
I have a photograph of me, him, and his wife in front of the book depository. He wanted to
Ironic.
meet me in 1992 because in this book, Trend Tracking, that I wrote in 1989, I had forecast a new third party and someone like Ross Perot. I'm making a very long story short. Going back into the Anatole Hotel, he said, I read your book. He said, it's a fine piece of work. Remember, this is the guy that's governor of Texas, a Democrat, that took the bullet in the back. He said, you're a fine piece of work, and I know your heart is in the right place. He said, but you don't have a clue what's going on. And neither do the American people. Because if they did, there'd be a revolution in this country.
Yeah.
This is John Connolly, who also became the Republican Treasury Secretary under Richard Nixon that took us off the gold standard.
Yeah. Yeah. Well, Kissinger had a very strong hand in that. I've seen some recent 74 documents, along with bringing China in, the normalization. The hand of Kissinger from that era was so strong, and Dulles and Kissinger. And these are our real warmongers. And you have willing apprentices. I mean, Tony Blair's never seen a war he's not fallen in love with. He's absolutely repugnant individual. I mean, he's a wannabe Kissinger, and he's gonna beat up on Russia all day long and insist we should be slaughtering our
What a piece of crap, that little scumbag.
Yeah,
Again, these are the shitheads telling us what to do.
Absolute garbage, like you
and
say.
I forgot about how about the little boy now playing your foreign minister, Cameron. We want to get that guy Gaddafi out of there. I forgot about him, huh? And again, none of these guys could fight their way out of a paper bag. They're little lawless guys that are so tough.
Yeah.
They're nothing. Again, in the Bronx, you call these guys out man to man, they don't know any piece of shit. They would be all like that. And that's what that people have to do. Call them out.
Yeah. No, I'm like you. It makes me my blood boil. A solid slap to the face, and they'd be whimpering and peeping in their pants. They're all real little brats. But anyway, absolutely awesome chatting with you, Gerald. Truly appreciate it. It's been great fun, and we look forward to sending a swathe of new subscribers that'll do the right thing and start supporting real alternative media that gets them ahead of the game rather than lagging. Have a great run into the rest of your week. Thanks for coming on, Gerald.
And thank you. Trendsjournal.com. History before it happens.
Love it. All the best.